The following is a presentation of TFNN.
Next up, we're going to go to Florida, Titusville. Nick, thanks for hanging on the line. How you doing today?
Hi, yourself, sir?
I'm doing well.
Ken, I want to say I'm 84 years old, and the way you explain things makes it very easy to follow.
That's very nice of you to say, Nick. I appreciate that very much.
Have a good day, sir.
All right, you too.
Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Happy Monday, everyone. Welcome to another edition of Breakout Investing on TFNN. Trying to sort out some problems with my chart appearing in the den today. If I don't get it resolved sometime during the first break, we'll try to get it resolved in break number 2. So apologize about that, but thanks very much for tuning in. The number to use to call, 877-927-6648. You can catch Breakout Investing 5 days a week now on TFNN from 3 to 4 Eastern. If you can't listen live, no problem. You can always head over to iTunes, download the podcast there. Feel free to leave a review as well. And you can also listen to all TFNN programming on your smartphone now. Been able to do that for a while, actually. Just open your smartphone browser, type in tfnn.mobi. Right in your smartphone browser, plug your earbuds in, and you can listen to the stream that way as well. Normally, the charts are working in Tiger TV. And rather than troubleshoot this while I'm on the air, I will take another look during the first break. Okay, apparently it is back up, my friends in Florida tell me. So good deal. All right, taking a look. We don't look at the Dow Jones Industrials very much, but it is outperforming today, and there are some decent setups in the Dow as well. So let's take a look at the blue chip index here. We'll do a quick refresh, but last check the Dow was up more than 100 points. Now it's up 106 points, 0.8% to 13,543. So technically, it's still looking pretty solid here. Volume on the exchanges, let me just get a quick look at volume, see how we're tracking today. NASDAQ volume tracking pretty close to what we saw Friday. On Friday, we had slightly above average volume, 1.81 billion shares. We're tracking pretty close to that today. On the New York Stock Exchange, Friday, we had volume of 804 million shares. We're tracking about 10% higher than that right now. So it looks like a decent day of accumulation, not only in the Dow, but in the S&P 500 as well. Let's take a look at the S&P 500. Tech stocks really lagging today. It's interesting. The S&P 500 trading in the slightly below the middle part of its trading range for the day, well off its highs, in other words. It hit an intraday high of 1457. It was up as much as 1.1% today, early in the session. Right now, it is only up 0.5%, almost 7 points to 1447. So giving back some of its gains. And the NASDAQ is really interesting today. Let's take a look at the composite, because shares of Apple are lagging, and that is weighing on tech stocks. Here's a look at the NASDAQ composite. After hitting a high of 3147, call it, it was up about 1% early in the session. It is basically flat here, up only 1.5 points right now to 3117. But again, shares of Apple kind of weighing on tech stocks today. Didn't see much in the way of news around Apple, but it is underperforming by a wide margin here. Down $5.18, 0.8% to 661.92. Apple was a nice winner in the Ultimate Growth Stocks model portfolio, and just recently I decided to take profits. I saw some institutional selling in the stock last week. It was still holding above support, but to me it just looks like the stock is ready to base and consolidate gains for a while. It's possible that we could see a breakout in the near term over $700 a share. David White was talking about Google and possibly Google being $1,000 stock. That's not out of the question for Apple either, but recent higher volume declines in the stock are a bit of a concern, and even though it is holding above support at $650 a share, there are sellers in the stock. There have been sellers in the stock for the past several days, and it is underperforming by quite a bit today, down 0.8%, again to 661.92. Now, inside of the Dow, let's take a look at some Dow charts here. Some interesting Dow charts. Not stocks that are on my radar exactly for my ultimate growth stocks model portfolio, but I do like stocks with strong charts, bullish charts, and Bank of America today. Financials doing well, up 1.9% to $9 a share. Here you can see the base that has been forming for several months now, came down, hit a low around 7, has been working its way higher, decent amount of accumulation, and it's forming a nice little handle area here. So you have a swing point for Bank of America at $9.79. A technical structure like this often can yield a technical breakout. So swing point of 979, want to keep an eye on this one for a possible breakout. When it comes to overall market health, again, in recent shows I've been mentioning higher volume declines in the major averages, signs of professional selling, institutional selling. They really have been very well contained. Haven't seen a lot of it, and I think headed into today we may have had 2 or 3 higher volume declines for the S&P 500 and NASDAQ. That's not going to be enough to really cause problems for a rally. You get 4, 5, 6 of them over a short amount of time. That usually will cause problems, but still plenty of decent looking charts out there with the Dow outperforming today. Figured we'd take a look at some decent charts in the Dow. So Bank of America is one, and staying in the financial sector, JP Morgan, another component in the Dow. Nice technical setup here. Here's a look at a daily chart for JP Morgan. It is up 1.6% today to 41.14, and we can switch over, take a look at a weekly for JP Morgan Chase as well, and see this is another example. This is kind of more of a V-shaped base here. You can see a sharp correction here where the stock went from 46 down to about 31 or so, has been working its way higher. You've got a nice little handle area forming with JP Morgan as well, with a swing point of 42.09. Let's move over, take a look at Cisco in the Dow. Cisco Systems. This is a weekly chart, and you see these little handle areas forming. Cisco as well, underperforming a little bit today, down 8 cents to 19.01. But this is one to large cap tech name to keep an eye on, because it's sitting underneath a swing point of 1975, still holding above its 10-week moving average. So interesting chart here. And finally, let's take a look at IBM. IBM is having a very solid day in the Dow. It is up 1.7% today to 210.99. And you had a couple of recent breakouts here. IBM first broke out over $202 a share. Here was the swing point, and let me just get the bottom of the chart showing there. So here was your swing point of 202, breaks out, then starts moving sideways again. So if you missed the buy at 202, you have another opportunity here right around $208 a share. So to me, IBM still looks like it could be in the early stages of a move here. And when we look over at a weekly chart for International Business Machines, you can see here is just now starting to take out its 52-week high. So IBM looking strong in the Dow as well. So stocks got off to a good start today. European markets were higher overnight. Good day for the Paris CAC 40, the CAC 40, or the CAC 40 in Paris up 2.4%. The Germany DAX index up 1.5%, and London's FTSE up 1.4%. So decent day for the market. Tech's lagging. So there's obviously concern about earnings season as companies just closed their books for the third quarter. And we'll see a bunch of earnings reports start to roll in a few weeks. But some concern out there about tech earnings. It is nice to see IBM outperforming today, but tech earnings, a little bit of worry there. Financial earnings should be pretty good, but overall third quarter earnings season, there's just a little bit of worry about what the numbers are going to look like, and of course what companies are going to say about the fourth quarter, and looking out into 2013 as well. So in a speech earlier today, Fed Chairman Ben Bernanke told the Economic Club of Indiana, first of all, he defended QE3, and he also just reiterated his thought that he is not expecting another recession for the U.S. economy, but he is concerned about sluggish economic growth and how that's going to negatively impact the job market. In other words, this unemployment rate at 8.1% is probably going to stay stubbornly high for a little while. So he spoke at the Economic Club of Indiana. And then some other headlines over in Europe. Eurostat, which is sort of the official statistics agency in the Eurozone, said Monday that nearly 18.2 million people in the Eurozone are unemployed at the moment. That's the highest total since records started being kept in 1995. Unemployment rate in the Eurozone currently stands at 11.4%. Got a good reading from the Institute for Supply Management Manufacturing Index earlier today. Surprise, surprise, because the manufacturing data have been very, very weak for some time now, but the ISM Manufacturing Index showed expansion in September for the first time in 4 months. That's good news. ISM Manufacturing Index rose to 51.5 in September from 49.6 in August. It was a much bigger than expected jump. The estimate was for a reading of 49.7. Coming up later in the week on Wednesday, we've got the minutes from the September 12th, September 13th Fed meeting. Of course, at that Fed meeting, that's when QE3 was launched by the Fed. Thursday, we've got weekly jobless claims factory orders for the month of August, and then the big daddy on Friday, the non-farm payrolls report for September, expecting job growth of 120,000 after 96,000 in August. Unemployment rate is expected to hold steady at 8.1%. Taking a look at crude oil today, ends at $92.48 a barrel, up 0.3%. Gold for December delivery rose $9.40 or 0.5% to settle at $1,783.30 an ounce. U.S. dollar a little bit weak today, down 13 ticks to 79.81. Let's take a look at a couple of gold charts here. Royal Gold, RGLD. This is a stock mentioned last week. It is very extended after a recent breakout, over $80 a share. And then it broke out over 80. Let me just get this. There we go. So you had a technical breakout here. Here was a base that started forming June of last year, and then it broke out in August over 80. You had a couple of opportunities to get into the stock here. It broke out over $90 a share here. It is very extended in price, so you don't want to chase Royal Gold, but when you take a look at GOLD, which is Randgold Resources, this is another stock that is acting very well, continuing to show relative price strength, up 2.8% today to 126.44. Headed into break number one, folks. You're listening to Breakout Investing on TFNN. We'll be right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure, 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
80% of traders fail because they don't know when to get in or out of a market, and all because no one taught them how to read the signs. You see, the stock market has a universal language called Japanese candlesticks, and each day, the buyers and sellers, the bulls and bears, go to work and build signs. This language has been around for thousands of years, and it's easy to learn. I'm Steve Rhodes, co-host of the Money Masters Show, and I'm a master sign builder. Download my free report, Candlesticks, The Speed of Trust, on the homepage of TFNN.com for one of the best-kept candlestick secrets. I'll also be conducting an online course Friday, October 19th, to teach you the language of the market's sign builders. You'll learn the best entry and exit techniques and strategies that will create extraordinary rewards. The course will be archived so you can review it as many times as you like, because trading or investing without learning this language is like running a red light. It's an accident waiting to happen, and there's no airbags or seatbelts. All the details are on the homepage of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing on TFNN. And just like that, you know, these fast-moving markets, well, all of a sudden we get a little wave of selling. About 35 minutes left to go in Monday's session. We've got the Dow well off its highs now, up 65 points still. 0.5% to 13,502. As you can see, it is trading in the bottom half of its trading range here. S&P 500 has been trading in the bottom half of its range for quite some time. Again, the S&P 500 was up 1.1% at one point during the day, but it is now trading near its session low, only up 1 point to 1441, almost 1442. The real problem all day has been with the NASDAQ composite. Tech stocks have been lagging all day, and really when I was going through my growth screens, looking for setups, looking for stocks outperforming, a lot of red in my growth screens today. So not sure exactly what that means, but the NASDAQ composite right now down almost 11 points, 0.4% to 3105. This is a pretty big reversal today. Not a whole lot of volume in the NASDAQ, but it could be getting heavier as the day progresses, because just about 15 minutes ago, it was tracking pretty close to what we saw Friday, which was about just over 1.8 billion shares on the NASDAQ, and on the New York Stock Exchange, volume has been tracking higher all day. So what looked like a good day of accumulation in the Dow and S&P 500 may not be the case by the close today. So we'll monitor that. Taking a look at bond yields today, that 10-year note, boy, has it been getting hit in recent days. Headed into today, or it was down in 10 out of the past 11 trading sessions. At last check, it was trading slightly lower, 1.62%. The yield on the 10-year note, yield on the 30-year bond, right around 2.82%. Some headlines today. Let's take a look at 3M. That's an easy ticker symbol, MMM. Stock is well off its highs as well. After hitting an intraday high of 94.27, 3M is still up 70 cents to 93.12. News earlier today is that they are buying ceramic armor maker Ceradyne, CRDN, for about $35 a share. Good day for shares of Ceradyne. Let's check in, see how that stock is doing. You can barely see its price blip up here, up 43%, $10.53 to $34.96. Not surprising since the deal. Value Ceradyne, like I said, at $35 a share. So checking in on shares of Honeywell today. HON on the New York Stock Exchange. Shares of Honeywell having a pretty good day, hanging in there okay, up 1.7% to $60.75. Honeywell International said earlier today it'll pay $525 million in cash for a 70% stake in privately held Thomas Russell Company. They provide technology and equipment for treating and processing natural gas. All right, other headlines today. Let's check in on shares of General Motors. You can see the stock is still holding above its 200-day moving average here. It had been under pressure headed into today for 5 straight sessions. Shares of GM right now up 26 cents to 23.01. News of another recall not affecting the stock too much as it continues to hold above support here. GM is recalling about 41,000 Chevy, Pontiac, Saturn cars in the U.S. because of concerns. There's a defective plastic part in the under the hood that could be causing a fuel leak. So they're gonna check that out. But shares of GM hanging in there okay today after again 5 straight declines. GM up 26 cents to 23.01. Very, very quiet in terms of earnings this week. Just a handful of companies set to report. Let's take a look at egg producer Cal-Maine Foods. Cal-Maine Foods. Another example of a stock that's very extended here. I have been kind of hammering this point home in recent days that you want to be careful not to chase here. You don't want to chase stocks that are too far extended, too far past proper entry points. You had a breakout in August for Cal-Maine Foods. Here was the breakout day right here where it broke out over $40 a share. It's now trading at $45.72, so it is very extended up here. Probably needs to take a breather and consolidate gains, but the stock is outperforming nicely today, up 1.7% to $45.72. Again, Cal-Maine is an egg producer, not a sexy business at all. What you see is what you get with this company, but earnings were up 200% from a year ago to 39 cents a share, and sales were up 12% to $272.9 million. All right, folks, hey, don't forget to check out a free 30-day trial to Ultimate Growth Stocks. You can do that right on the homepage of TFNN.com. Click on the newsletter tab, then investment newsletters. Model portfolio currently has about 11 stocks in there that are outperforming, doing well. So check it out. We'll be right back, folks.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing on TFNN. Right before we went to the last break, I mentioned that you can get 30 days free to my Ultimate Growth Stocks newsletter, so I would urge you to take advantage of that. I will be publishing my next weekly update tomorrow morning. That usually goes out around 11 a.m. Eastern Time, thereabouts, give or take, and so you get a weekly update every Tuesday, and then in between weekly updates, I send out email buy alerts, sell alerts, general market updates, depending on what I'm doing with the Ultimate Growth Stocks model portfolio. So I'm about 60% in the market right now, maybe a little bit more than that. Have a fair number of stocks in the model portfolio currently, and we'll be looking to add to my strongest performers. I've got several that are holding nicely above support levels. Part of the portfolio management that I use for the model portfolio is to, never be afraid to cut loose stocks that aren't working. I mean, anytime I initiate a position or I put out a buy recommendation, I have expectations of what that stock is going to do. So if I'm buying a fundamentally and technically strong company, I expect that I'm either buying it as it is breaking out, clearing a consolidation, or I'm buying in anticipation of an upward move. And if that scenario does not play out for whatever reason, maybe the broad market sells off, we get some negative market headlines, I'm not interested in seeing a small loss turn into an unmanageable loss. So Typically, I cut stocks, I cut losses short anywhere from 5 to 10% below what I pay for the stock. But because I do pay a lot of attention to price and volume trends in the major averages, and I do the vast majority of my buying during market uptrends, when you're buying during market uptrends, the chances of having to cut a loss short is much less likely. If you're buying stocks in a market that is under mild distribution, or worse yet, even under heavy distribution, that is when you tend to have to cut losses a lot, and that you can die 1,000 cuts by having to cut too many losses short. So with the market uptrend still being intact here, I'm not averse to adding nibbling at some new names here and there, but I did most of the buying in the model portfolio towards the end of July and into August. So as a result, I've got some names in there that are working fine. I'm in no rush to sell them, but listen, as I've been saying, we're in a volatile market. To me, it looks like there are signs that new money is coming in from the sidelines here. I think there's a chance that could happen between now and the end of the year. But let's just swing over, take a look at the NASDAQ composite here, take a look at a daily chart again for the tech index with its 10-day, 20-day, and 50-day moving average. You can see it's looking a little bit tired here. I do expect that 30.56 level to be a meaningful support level. In other words, if it gets down that far, I would expect that that buyers would come in and support the stock. I think there are too many bullish stock charts out there. I think there's new money that still wants to come in from the sidelines here. So if the NASDAQ composite were to break convincingly below its 50-day moving average at 30.56, that could bring more sellers into the market. Then we'd have to change our strategy a little bit. We'll have to pay closer attention to current holdings in the model portfolio. Maybe consider taking partial or full profits. So NASDAQ composite, especially today, near its session low after early strength. Not a whole lot of volume behind the decline today, but somewhat disturbing action for tech stocks today. And let's just take a look at the S&P 500 here. S&P 500, there it is. And you can see it is also trading near its session low after being up 1.1% earlier in the session. It is up about 2.5 points now to 1443. Just trading right around its 20-day moving average. I expect the 1414 level, 1414 on the S&P 500, which again is its 50-day moving average here, to be a meaningful support level. It's not out of the question that both indices could undercut their 50-day lines. I'm just not expecting it. I think it would take some pretty daunting, pretty dire market headlines for that to happen. They could come, if third quarter earnings season is just not up to snuff and the results are worse than expected. But I'm going to stay optimistic with a glass half full outlook at this point. We do have same-store sales data coming up on Thursday. We'll see a lot of retailers reporting same-store sales for September. So let's take a look at some retailers that are performing pretty well here. Lululemon Athletica. Lululemon Athletica setting up in a pretty decent base here. It's forming a handle area in a cup with handle pattern. Not great price action. Yeah, I mentioned a lot of growth names under pressure today, definitely facing selling pressure. They have been, even when the market was higher, I noticed a lot of names in the red in my growth screen. So Lululemon Athletica right now down 0.5% near its session low to 73.59. I think I have a weekly chart here for Lulu. This is an example of a good base that is setting up here. So I would not buy this early. In fact, do I have a, let's see. No, don't have a weekly chart for Lululemon. Let's just go back and and take a look at the daily. So, this is still a breakout candidate, no question about it, but, we'll have to, I'd rather wait for it to break out in heavy volume over a swing point of 78.97. That would be the high in the handle area set back here in September. So, a little bit of volume behind the selling today, could come in higher than what the stock traded on Friday. So, after today's price action, technical picture a little bit more questionable here, but still a stock that clearly has not broken down yet. Let's take a look at shares of Estée Lauder, EL. This is a nice move today. So we see stocks like this that are breaking out in heavy volume. The market is still, dishing up plenty of stocks that are working out there. So Estée Lauder breaks out today in heavy volume, stock up 2.5% to 63.10. So selling in the market late, not affecting this stock at all as it trades near its session high. Nice breakout over a swing point of 61.98 for Estée Lauder at 63.10. It's only $1.25 above that swing point. So definitely still within buying range here. Not a stock you'd be chasing if you were to buy it right here. So bullish price and volume action today in Estée Lauder. Let's take a look at Catamaran. It's flirting with the $100 price level. Today, Catamaran used to be known as SXC Health Solutions. They are a provider of pharmacy benefit management services, basically help these drugstores manage their prescription flow. Catamaran at 99.09 right now, off its intraday high of 184. It's pretty typical of what you're seeing today. A lot of stocks strong early and weak late. So this is another yellow flag in the market here, but Catamaran still up 1.1% today to 99.09. Nice base taking shape here. The stock is not ready yet. It is a base building stock and still has more work to do to complete the base. In fact, what I'd love to see from here is a nice little handle area form. Maybe the handle area brings the stock back down to the 95 area in light volume. A little bit of some sellers get shaken out of this market, and then that could pave the way for additional price strength for CTRX. Also in the healthcare space, name that popped up today, Healthcare Services Group. This is a small cap name, but pretty solid company here. I think the market cap is just a little bit over $1 billion, I believe. HCHG, they're an interesting company. Market cap $1.6 billion. So good technical breakout for the stock today. Good rush in trading volume. It is up 4.1% to 23.80. The swing point here, let's just double check here, 23.55. You could put as a buying area over here. So it is breaking out, hitting a new high in strong volume. Definitely a stock that is under some accumulation here. They provide housekeeping, maintenance, laundry services, even some dietary services to long-term care facilities across the U.S. Pretty good fundamentals. Sales growth has been accelerating in recent quarters. Always like to see that with a growth stock, and they should be able to grow annual earnings by around 20% this year and next. So it's a pricey stock valuation wise, but again a pretty good growth story here at Healthcare Services Group. Another technical breakout that is working here, and you can see stock has been under accumulation last week and into this week as well. Here's an interesting name, WAC. I'm going to show you WAC because it's a fundamental powerhouse, no doubt about it. But it is yet another example of a stock that's very extended. It's having a solid day today, up 7.6% to 39.82. Walter Investment Management again trades under the ticker WAC. Broke out over $24.88 in mid-August at $39.82. It is very extended in price. So another one that you don't want to chase here. These stocks try to lure you in, but you have to follow just a key rule. Don't buy a stock when it is overbought or when it is extended in price. Here you had a good solid breakout. You see in August, Walter Investment Management rallied, and then it just traded tightly, moved sideways. So anytime you see that type of price action, it's it's bullish and can often precede a breakout. That's exactly what happened with WAC. And it continues to perform well, but if you missed it at 28, you don't want to chase it up here. Still a stock under a lot of accumulation, looks very strong here. They are involved in subprime, non-conforming, and other credit-sensitive residential loans. So they are, seeing a lot of business, and with signs that this housing market has turned and made it through the worst of it. This is a company that definitely could see increased business. Speaking of the housing market, let's check in on shares of ITB. This is the ETF which owns a bunch of home builders. You can see it's been under pressure, under some selling pressure recently, still holding above support around $18 a share. ITB was recently trading around $19.26. So I'd be careful. Looks like home builders are probably ready to consolidate gains here. Not surprising, since ITB has been in a strong uptrend basically since early August. Needs to take a breather, needs to consolidate gains for a little bit. So let's see if that happens with the ITB. Shares of MasterCard. We've been watching MasterCard. This is one of the few bases out there that is setting up. MasterCard still trying to muster a breakout here. Some will say that it broke out maybe a couple of weeks ago. I suppose you could say that when it broke out over, 447 thereabouts, but you've got another swing point here for MasterCard at 461.79. The stock is trading right in the middle of its trading range today, up $5.08, 1.1% to 456.56. So the high point in the handle area here is just over 461. So MasterCard making a case here that it wants to move higher. I'm not convinced. I'm just kind of watching it right now, and we'll see. It's, again, weekly chart shows a pretty decent technical setup, but again, this is a stock that has not reset its base count yet, as far as I can tell. When I say reset a base count, you can see all the lows of prior consolidations here. They stayed above prior consolidation. So when you get a base reset, for example, you had a breakout here, stock rallied, selling pressure came into the stock here, and again, I'm looking at this in Tiger TV for MasterCard. If the low here had undercut the low of the prior base, that usually serves to shake out enough sellers to reset the base count. So it doesn't look to me like MasterCard has reset its base count for a while, so arguably could be a late stage base here. They're more prone to failure. So they can work, and it's not out of the question that MasterCard, if we get another round of buying between now and the end of the year, this could be a successful breakout, but too early. Let's watch and see if it materializes. It's going to take more accumulation in this stock for a breakout to really work, and I'm not really seeing meaningful signs of accumulation in MasterCard at this point. All right, some other decent setups out there that we're looking at. Celgene, another stock that has made a big move recently, but technically still hanging in there, showing relative price strength. Another stock near its session low today after early strength. Shares of Celgene up 25 cents to 76.65. But a look at its weekly chart, and you see actually a pretty decent technical setup here, watching Celgene for a move over 78.63. Another cup with handle base setting up here. I'm really not sure what to make of these, the cup with handle bases that we're seeing now after a big run for the market. I mean, the market's making a case that some of these cup with handle bases, these stocks like MasterCard, Celgene, Lululemon, yeah, they could break out and they could show leadership, but really when the market starts rallying, you want to be there in the early stages of the rally. That was in late July, early August. So I'm not going to rush out and buy these if they do break out, but they're worth watching anyway. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator, also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, everyone, to Breakout Investing on TFNN. Yeah, part of the reason for the market's malaise today, you have to chalk it up at least to Apple really showing ugly price action today, now down $9.38, 1.4% to $657.73. Don't know that I've seen any news on it, but Apple is getting close to its 50-day moving average here at $650 a share. It's only about $7, a little more than $7 away from that. So again, Apple, I took profits in Apple last week. Of course, Thursday it rallied back sharply. I started to question my decision to do it, but I, told subscribers that I was just seeing kind of some big money sellers in this stock, and I thought that it was better to kind of manage risk, take some money off the table, and I took a decent gain in Apple. So under a lot of selling pressure today, though, flirting with coming down to its 50-day moving average. Let's take a look at SWK. It's a large cap name called Stanley Black & Decker. Big American brand out there. This is another stock that is setting up in, looks to be a pretty decent cup with handle pattern here. Stanley Black & Decker forming the handle area right now. SWK is the ticker here. Swing point of 78.47. The stock right now is at 76.09, so about $2.50 underneath a swing point. Some of these favorable technical setups will work if we continue to see signs that new money is coming in from the sidelines. But if indices come under pressure, they start with flirting with breaking below their 50-day moving averages, which we went over earlier in the show. Of course, these breakouts are most likely not going to be successful. But Stanley Black & Decker, another interesting setup out there. And also there's a Russian search firm called Yandex, YNDX, on the NASDAQ here. This is another stock that is definitely under accumulation here, which is always important. Pay attention to stocks that are showing nice above average volume price increases. You can see how volume was really heavy in the stock, but notice how it really didn't give up much ground. It's been drifting lower in light volume. So Yandex is another stock where I wouldn't be surprised to see a technical breakout, but the important thing to remember is that the breakout has not happened yet. It's making a case it wants to move over that swing point of 25.23. That would be the high point in the handle area. Fundamentals are outstanding. Growth prospects very solid at Yandex. This is basically, they're based in Russia. They do what Google does in the U.S. and they do what Baidu does in China. It's a Russia-based search engine benefiting from soaring internet usage in Russia, but full year earnings expected to grow 28% this year and 34% in 2013. So when you've got bullish technicals and bullish fundamentals, it's always important to keep stocks like this on your watch list. Shares of Yandex off its high, just like most other stocks today, up 22 cents to 24.37, still up 0.9% on the day. I mentioned very quiet in terms of earnings this week, but after the close today, let's check in on shares of TISI, a company called Team that is actually in rally mode ahead of the results, up 3.7% today to 33.03. So some buyers coming into the stock ahead of earnings. They provide a bunch of specialty services related to the maintenance, inspection, and construction of mechanical and piping systems used a lot in the energy industry. So Team acting well ahead of earnings after the close. And then tomorrow we'll hear from Mosaic, MOS, and Wednesday, Family Dollar Stores and Monsanto. That'll do it for today, folks. Thanks very much for tuning in. Coming up next, the Tom O'Brien Show. Have a great afternoon, everyone.